Hey guys, hope you are all having a fantastic day. Today we finally got to hear what the Fed has been up to and what they intend on doing to curb inflation, and for the love of sweet tendies, what an absolute disappointment the entire hearing was. We are going to break down everything that happened and what you need to know immediately. I know most of my viewers click out of the video by the 50% mark, so I want to state this in the beginning. Watching our entire portfolio gains is not an easy thing to do, and though we hold strong and enjoy the dip, it is without a doubt quite testing to see a year's worth of gains completely vanish right before your eyes. I know a lot of people get unsettled by this, and many have no one to turn to talk about what is going on. It's why I recently made my Discord, which now hosts over 2,000 people, all talking about the market and meme stocks. The joyful vibe that once filled the air back in January and summer last year may have disappeared from many, but it is still present and growing in my Discord. I want to encourage everyone to join us there and be present for all the funny and important conversations taking place. Even if you don't want to participate, trust me when I tell you see thousands of others talk about all that is happening will do wonders for your sanity in these dark times. Links for my Discord will be in a pinned comment below and on the video description as well. We have quite a bit to go over about what happened today. Before we start, let me quickly state that I am not a financial advisor, and that all content discussed in this channel is simply information gathered that I deem important for people to know, so that they can make informed decisions. All efforts are aimed to better understand the nature of the current market in anticipation of the greatest squeeze in financial history. Let's dive right in. Jerome Powell spoke today during his confirmation hearing before the Senate Banking, Housing and Urban Affairs Committee, and nothing of which what was said brought any inspiration of imminent positive change. In fact, the fact that what we got today wasn't positive while knowing that this is the best they could make of the situation to try to appease markets is what has devastated markets once again. There is no way around this fact, the central bank has fallen further behind on economic developments. The Fed signaled that it would start a rate hiking cycle soon on the month of March, and would follow it with a gradual reduction in its balance sheets. In a shocking to many, the Fed also announced that they would be ending their asset purchase program by early March too. The markets had more or less accounted for these things to happen in the way they have reacted, but they seem to stumble greatly upon realizing what some of this means, which is why after moving and consolidating, all major indexes started slipping and fully dropped at the end of the day. I made fun of this on Twitter with some memes, but it is actually pretty serious. While Jerome the Joke Powell was speaking, some of his statements explaining the outlook towards policy led to very noticeable changes in the markets, with government bond yields increasing and stock gains vanishing, marking yet another red day in this bear market. The Fed's announcements definitely won't appease those that yearned for them to appease markets and give flexibility in light of current economic weakness and problems. If there is one sentiment that proved to be correct is that the Fed has not yet caught up to the problems they themselves caused with inflation and are not even close to coming to control the problems either. Talking about inflation, the Fed's preferred measure of inflation rose to 5.7% in the 12 months ending in November. In regard to this, Jerome Powell said that like most forecasters, he continues to expect inflation to decline over the course of the year. He believes that less pressure on the global supply chains and less stimulus from Washington would help that. The problem with this statement is that Jerome Powell admitted he cannot predict with much confidence exactly what path for the policy rate is going to prove appropriate. Economists are upset the Fed took so long to confront the burst of inflation, and even more are now expressing grave concern that moving too quickly to stabilize prices now where we are could destabilize things, resulting in lower hiring and potentially leaving many workers without a job. And to compound this issue in the short term, the central bank now faces a very delicate and risky balancing act. If the stock market, which has been chaotic to say the least, continues to remain where it is or starts treading lower, the Fed could be forced to delay some of its credit tightening plans. They already said they set out some principles by which they will abide by to reduce their nearly $9 trillion in bond holdings, a sum that has more than doubled since the pandemic began. Analysts think the Fed will begin doing so in July. All in all, as you may tell by this, the Fed did not inspire hope, they did not express any type of advance or improvement in remedying the situation, they did not provide a clear plan ahead, and when pressed about the complexity of some issues, the best Jerome Powell could say was he could not answer the questions with confidence. This is the man the markets, and heck, even the economy, currently rely on to bring us back. Let's talk about today's abysmal trading session. The S&P 500 ended shedding 0.2%, pulling back after rising more than 2% around the afternoon. The Dow lost 0.4% and tech-heavy Nasdaq lost 0.02%. Oil continues to march up as the ongoing threats and potential outbreak of war in Ukraine is affecting that sector. Senior market analysts think it unlikely that oil and gas will be used as a weapon anytime soon, but if they were, it could lead to a serious surge in prices given how tight the markets are. Tesla stock fell today, even after reporting quarterly profit and sales well beyond Wall Street expectations. What led to this was the fact that their factories have been running below capacity for several months due to supply chain shortages that will most likely continue into next year, and that alone made investors uneasy and weary. However, do not underestimate the report, since it will have a very positive impact on the markets. I think it will help solidify these current levels as we continue to try to bounce up. We could see the bullish sentiment actually reflect positively in tomorrow's trading session. Nothing new from GameStop and AMC unfortunately, they just continue trading like every other stock right now as the market weights negatively on everything. One last important thing you guys need to know. As a huge win for investors, the SEC held their vote with the intention of adding more transparency from hedge funds. The vote passed, with a 3-to-1 votes in favor of the new changes. The only person that voted against transparency was Hester Peirce, who wanted to keep hedge funds' activities to remain less transparent. Let's now talk about today. The Fed submitted over $1.613 trillion in reverse repo operations today. Dark pool trades for AMC accounted for 58% of the total volume today, while dark pool trades for GameStop accounted for 52% of the total volume today. AMC had a larger amount of buy orders than its sell orders, with GameStop also having a larger amount of buy orders than sell orders. Now, let's talk about performance. AMC traded bearishly, losing under 1% for the day. It began trading very bullishly during the pre-market, dunning and staying above the VWAP. Upon market opening, AMC dropped below 16, but quickly bounced up to 16.70. Because it was a run, it did not build support along the way, so instead, it ended up falling back down to 15.82. However, after this dip, AMC started running, reaching 18.16. It appeared to be preparing for another run before it started falling again, retesting that 15.75 low again. AMC attempted to bounce but failed, instead closing at 15.94, below the VWAP. As for what to expect for tomorrow, it is impossible to determine where AMC will trade. So many changing variables with a volatile market make it incredibly difficult to project probability of any kind. AMC had a big surge today, and it was really sad to see it all vanish, but this is the game when you play meme stocks. People intending on buying AMC will definitely benefit from these low prices. GameStop traded bullishly, gaining over 3% for the day. It began trading very bullishly during the pre-market, staying above the VWAP. Upon market opening, it dipped just a little bit before running to 105.90. It then dipped down to 100.33. GameStop then started running up, reaching 119. It seemed to be consolidating around the 115 support before market conditions brought this stock down once again. GameStop ended up closing at 103.26, below the VWAP. Like I said, it is impossible to determine a good structure by which to make any projection based on current estimates. GameStop is still super cheap at 103, and I bought some tendies today, though I did not go full out, because I think we could go under 100 again in the near future. Today was certainly disappointing to see. The whole market appeared to be recovering only for us to all collectively slump back. However, I remain very bullish. Small cap stocks seem to be signaling that we are at the market bottom, and the fact we are testing resistance upwards rather than just falling without relief shows that what lies ahead for us is a rally. I think everyone got amazing prices for GameStop and AMC as well as any other security for that matter. Stay positive. Build a trading plan that allows you to average down as much as possible and you will get through all of this winning in the end. It will be super interesting to see how the market behaves from here on out now that we heard back from the Fed and have had positive earnings from both Microsoft and Tesla. I think the bright days ahead of us are not as far as some might think. And that is all I have for you guys today. Let me know if you have any questions and what you thought about the video, and don't forget to come on over to my Discord. Let me know if you bought today's dip or if you were waiting to see if it falls any further. Thank you all for the love and support you have shown me. I hope to see you tomorrow on the next one. If you want to support this channel, I have a Patreon link in the description as well as some one-time donation links for Cash App and PayPal. Thank you again for being a part of this channel. I will continue striving for better content. Enjoy the rest of your day. Keep on buying the dip and to the moon.